All righty. What's going on, everybody? We are live. It's Tuesday, December 9th. Market is closing in about 30 minutes. So we're doing a little recap of the market. Really not much today is going on in terms of big movements. Silver looks like it's breaking out again. It's up about 4%. Gold is flat. Bitcoin is for Bitcoin. It's flat. It's up, 2.5%, but still within the exact same channel it's been trading in since, November 20th. And so not much action out of the market today. Do a Q&A like normal. So let me go ahead and put that in the chat. Q&A. Ask me anything. And for those of you who are new or just joining, I was whenever I try and share my screen, it tends to glitch out because I'm doing it through Chrome right now. I was downloading OBS and got about halfway through that process, and there's a couple extra things I need to go through and do on it to make sure that it works well in terms of sharing the proper screens, getting the layout set up, the inputs for the microphone and the camera and all that. And so I don't want to, I didn't want to spend any more time setting that up because it might take me another hour to get that fully working, and I just wanted to go live before the market closed here. So hopefully that'll be set up. I'll have that ready by the next live stream. That way I can have the charts up and news and that kind of stuff while we stream. All right. Do you think silver will take a long time to reach $100? Yeah, I personally think so. It's not that I'm bearish on silver. It's just it's had a really fantastic run recently, and it's at 60. So you need it to go up another, what is that, 60% from here. And it's already doubled in the last 6 months. So it's already up 100% in the last 6 months. So I'm not saying it can't, but I don't currently have an open trade on it other than just my standard, long-term holdings. Thoughts on Gold Mining Inc? No thoughts. Let's see. Have you read the Book of Enoch? I haven't read the actual Book of Enoch. I've read some books on it that explain it, which are very interesting. What's the dude's name? Reversing Herman. Who wrote it? Reversing Herman by Michael Heiser. So Michael Heiser's books are great. What other books has he written? My other favorite one by him is The Unseen Realm. Yeah, The Unseen Realm and Reversing Herman are very good books on showing what Book of Enoch really means and how it, like the biblical authors integrated the stuff that they knew about that and thought about that into the other books in the Bible. So I like those books. Do you know monetary metals? What risks are there by investing in them? All right. So, disclosure. I always like to share with you what my positions are. That way, what my agenda is, because everybody has an agenda. So with monetary metals, they have sponsored my YouTube channel in the past. I am a customer, and I'm also an investor in the actual company. I'm a part owner. I really like monetary metals. In fact, I wouldn't be any of those three things that I just told you if I didn't like the company. They earn you yield on your gold by participating in and structuring gold loans and gold leases. So there are companies whose risk pricing risk is decreased by borrowing in gold and paying back gold with interest denominated in gold rather than borrowing in dollars, because the gold price moving up and down adds an element of risk to their business then. And so, as gold holders for a portion of your gold, you participate in those debt instruments and you get paid interest on your metal. Um, and so, that's how they operate. I really like them and I use them. And I think they're going to continue to grow and do very good things. What are your thoughts on crypto in 2026 with the QE cycle coming? I think all cryptocurrencies are going to zero except for Bitcoin. I think Bitcoin will eat everything else. Um, and I think 1 year is too short of a time projection. I am bullish. I think it's, in my opinion, more likely Bitcoin is higher in 2026 than lower, but it doesn't really, for the short term, I'm not like, if it's lower, it's like, okay, I'm still dollar cost averaging. Um, would you be adding more calls on Berkshire Hathaway? It's not a huge pullback. 1% down, maybe. It's currently hitting the trend line. So maybe it's just not a huge opportunity. Let's see. What do you think of trading based on time? Usually like you're talking like a TWAP, like time weighted average pricing. Usually that's only necessary if you're working really large orders. It might be, I don't know. I don't do it. So I guess I don't think highly enough of it to do it myself. Let's see. Next question. Will the yen unwind push our rates higher or lower? Personally, I think a lot of the speculation around the unwind of the yen carry trade is really, really overblown. Mostly because this entire move has been forecasted and expected way ahead of time, and most market participants have gotten in position in anticipation for this. It's no secret that the Bank of Japan has been signaling for years now, hey, we're going to be pushing up interest rates. And it's no secret that the Fed has been signaling that they're going to be lowering interest rates. So I don't expect any large, especially unorderly unwinds of any massive leveraged positions that cause huge volatility across the market like it did the first time, because those moves were largely unanticipated. They were unexpected moves. And for at least 6 months, the first 6 months of 2025, and maybe even more than that, all the large players were able to reposition and get ready for this move that's been coming. So I don't see any sort of large disorderly unwind like we saw early in what was that, early 2024. What are your thoughts on the tasty trade way of options trading? Basically selling option spreads with the highest percent of profitability, taking profits early. Tasty Trade is just a trading platform, right? It's just built for traders, trade directly in the charts. Yeah, it's just a trading platform. So I'm not familiar with a strategy called a tasty trade way of strategy of trading options. But what you described, selling options with the highest percent, I'm assuming what you mean by there is highest percentage probability of profitability. unless what you mean by there is the largest potential return, which would be a low probability trade. Um, so they have a YouTube channel. That's what they advocate for. Okay, well that makes sense. Um, I there's 2 things here, and I'm not sure which one they advocate for. There's what you said is they're either saying, "Hey, sell something that has the highest probability of being profitable, and then just take profits early, close out quickly," or you're saying trade sell something that has the highest profitable potential, even though it's a low probability trade. And those are opposite trading strategies. And personally, this is the way I trade because for years, when I first started trading, I targeted high probability trades. And the problem with that is you make really good money for a long time and then you blow up. Because and when I say blow up, I mean I've lost, the first time I blew up, I lost 90% of my net worth. The second time I blew up, I lost 60% of my net worth. It was like I blew up. Um, in a bad way. And it's because when you're trading high probability trades that have a very, very high likelihood of working out, in the event that they don't work out, which statistically is only supposed to happen once every 100 years or once every 1,000 years or whatever, when those events that shouldn't happen very frequently end up happening, um, the loss is usually way more than any amount of money you've ever made on those trades. And so for years now, because of all those painful, expensive lessons I learned early on, I trade the opposite way now. I trade low probability trades that have a low likelihood of working out. And obviously, I'm going to do as much work as I can to make sure that I think, something is going to move one direction. Um, but if it does do what I think it's going to do, then I have a very high uh, potential profit, usually targeting anywhere between a 3x to a 20x return per trade. And because of that, they are very unlikely to work out in my favor. But when they do, they make more money than I've lost on all the others. And for years now, my compounded annual growth rate has been over triple the market average, the benchmark. And so it works a lot better for me than the way that I used to trade. Um, I'm betting on unpredictable, unlikely events. All right. Next question. What camera do you use? Well, right now I'm using my iPhone. On Macs, you can use your iPhone as your webcam, and it works way better than any webcam that you can buy for hundreds and hundreds of dollars. Works better than the built-in webcam on the Macs, and it's fantastic. But for my YouTube videos for recording, I use real cameras. Um, right over there is my recording setup. So I've got my lights, all my sound dampening material, all my bars and everything is hanging off of, all my cords. And you can see way back in right there is where I've got my cameras. Then up there, I've got my microphone hanging right there. And those are just Sony A6400s. I just record in 4K to an SD card and then send my files over to my video editor. According to the Bible, money means nothing. Oh man, I could spend the rest of this live stream ripping that statement to shreds, but I won't. I will comment on it gently. um, when God created the world, everything was good. That was, on each day of creation, he saw it and it was good. And Eden is where he made the garden where he put man. And once he made man and woman, it was very good. And one of the key features of Eden was these rivers that flowed into it. And one of them came from the land of, I think it was called Pishon, where there was lots of good gold. And so the authors of the Old Testament used money, had an understand money at that time was gold, and had an understanding of what money was. And embedded in that story is the fact that God created money. And it was good because in creation everything was good. Also, when you look at number one, like if you just do like a kind of like a word search or a topic search, the number one topic that is talked about or mentioned in the Bible by a huge margin is money. The Bible has more to say about money than anything else. And most of what it says about money is just very traditional, like, advice, save, invest, work hard, try and stay out of debt, uh, just very regular, good, common sense financial advice. Um, the Bible says that God is the one who gives people the ability to produce wealth. Remember God, because it's God who gives you the ability to produce wealth. Um, it says if you don't work hard enough to be able to produce enough to take care of yourself and your family members, you are worse than the unbeliever. Um, I made a whole video about things that the Bible says about money that most people don't expect. But basically, the Bible does not say the things that are negative about money that most people think. Really, the things that it says that are negative about money are don't treat money as a god, because money is a very effective tool. It is a very, very bad god. And you will ruin your life if you treat money as if it's a god. Um, but the only way to not be a slave to money, in other words, treat it as your god and worship it, is to not have to live for it. So if you are forced to live in a way where you have to do things you don't want to do for money, you are a slave to money. It is your god. So the only way to circumvent or flip that and make money your slave, make money work for you, is through financial freedom. Um, so I think the truth about money is not what people think it is from a I guess a Christian perspective. All right. Do you expect to pull back in metals in early 2026? My most likely, what I think is most likely to happen over the coming couple of quarters at least, is just more volatility. I'm not expecting a huge run up or a huge crash or anything like that in metals. Um, you tend to see something like gold front run monetary policy, and that has largely happened already now that monetary policy is starting and gold's move has slowed down. So I think we'll probably start seeing more volatility and sideways action. Let's see. How much do you think the S&P 500 will increase next year? Yeah, mm, I don't like short-term price projections. I would not be surprised at all to see another very good year out of the stock market. That tends to happen when the central bank starts cutting rates when the market is at all-time highs. The market tends to have very good following 1 to 2 years. And we are entering into an easing period. So, all right, let's see. Carvana will be added to the S&P on the 22nd this month. It currently has over 100 PE, RSI of 78. I don't trade or sell, but I feel like I should play this and maybe sell half or all my shares on the 19th. Well, I can't tell you what you should do with your money. All I can tell you is that I am currently short Carvana through the use of put options. Um, it it doesn't make a lot of sense to me, the current price, especially given what insiders are doing, which is selling um, by the billions. Um, and so, yeah, I am bearish on Carvana, but I've been wrong about it this entire time that I've had that position. So the market can remain irrational longer than you can remain solvent. Um, I like selling 0 day till expiration SPX call options on April 9th. Oh, no, you don't like it. You're just saying, like selling 0 day till expiration SPX call options on April 9th, the day the S&P 500 went up 8.5%, you would have been liable for around a 500x move. Yeah, those are the kind of trades that they look really nice, but like the day before, it's like, oh, I can bring in a ton of money. It's almost guaranteed to work out, very little risk from a probability standpoint. The chances that the market moves this much is, unlikely, but that's why you're getting paid so much for that. And when it doesn't, when the thing that has never happened before happens, you get wiped out. Um, New member to breakout resource alerts. Just for those of you who aren't aware, that's one of my trade alert services. Can I get your opinion on OHI? Recently, it broke out. From a technical analysis, is COF and XOM approaching a breakout? Okay, I'll try and share the screen. Let me know if it starts to glitch out, and I'll end the screen share. So we're looking at OHI, kind of a curve on the top, which is, maybe this is going to be a failed breakout. Let's go a little bit longer, see if there's any price action further back. Okay, so this goes back to 93. So as long as it holds above this old resistance as new support, that is a very, very bullish looking chart. We've got a nice little probably cup and handle there if we're looking at the weekly chart. Yeah, a nice little cup and handle there. So from a chart perspective, this is a beautiful setup. I don't know anything about the fundamentals of this company, but as far as the chart goes, I really like that. Capital One, from a company perspective, I don't really like the company, but they've performed very, very well. This could again be another breakout here. I'd want to see it confirm, even if you get in a little bit late. I'd want to see, I, unless you're going to have a really tight stop, just in case this is a failed breakout. They've already had a really, really strong run here. So I'd also want to pair this with some fundamentals to see, where's my target. I always set my exit before I set my entry. And then what was the last? It was COF and XOM. XOM is the other one. Yep, we are getting close to a breakout here. Once we do have a breakout, this has been consolidating for almost 3 full years now. So yeah, once we do get a breakout, if we go for a longer term chart, I think, yeah, I mean, look at that. Look at that nice setup. So that'll probably have an explosive move once it does, but it's just a matter of if it actually does end up breaking out. Okay, let me know in the comments whether that glitched out and you could see the screen share that whole time. If it did glitch out, I won't do that again. The love of money is the evil. That's another thing that everybody gets wrong. Everybody says money is the root of all evil. The Bible says the money is the root of all evil. It doesn't say that. It says the love of money is the root of all kinds of evils, which sounds similar, but it's very different for, a couple of reasons. So number one, it's not money, it's the love of money. So that's that greed, that's that worshiping of money. Money is a great tool, a terrible God. So it's the love of money, number one. Number two is it says it's the root of all kinds of evils. So it's not the root of all evil. It's not like, hey, the tree that has all the evil things on it, the root of that being the love of money. It's not even going that far. It's saying there's a bunch of evils out there that have the love of money as its root. Sure. Yeah, absolutely. I don't think really anybody would disagree with that, but it's been twisted and kind of mistranslated in just common sayings, and the traditional thing that people say, that money is the root of all evil. It's not what it says. It says that the love of money is the root of all kinds of evils. Okay. Give me a break. If you are in God's family, his angels will supply all. No, that's not true. Not even close. There's not a single shred of the Bible that says anything about the angels supplying anything for humans, about producing for us. In fact, work to produce for ourselves was the original job that God gave to mankind in the garden before the sin. Work is not the result of the fall. Work is not the curse given to man as a result of sin. Work was the gift given to man in the garden. He said, work it and keep it. He said, go out into the world and take dominion over the world and subdue it. That means make it profitable for your own use. Go out and find all these raw materials, these resources. I've created this creation for you. Go out, subdue it, make it profitable for you, make real things that are useful for you. You've got the materials. Now go work and make it good for you. And that was given to man before sin. The curse was that work is toil. Work is like more difficult and suffering and harder. But there's absolutely not a shred, not an ounce of any like true theology that says, oh, we're just supposed to sit on the sidelines and hope God takes care of us. It's literally the opposite of what it says throughout the entire Bible. Okay. Next question. How are you feeling about both Bitcoin and gold for 2026? I am long both. I have a couple small trades on Bitcoin, no current trades open on gold, but I've got my long-term holdings of each, and I'm dollar cost averaging for my long-term holdings of each. So I just always like to clarify those are different things. I've got long-term holdings and I've got my trading account, and so even though I'm not going to sell my long-term, my just holdings of gold, I will definitely have trades open from time to time on gold, puts and calls or anything else. Same with Bitcoin. Still using monetary metals. Yes. Really like it. What are some of your favorite nuclear stocks? GEV, CEG, OKLO, UUUU. And then all the ETFs. Most of the ETFs are good. Like we've got some like NUKZ is an ETF. You can look at their holdings, see what they hold. URA, URNM, those are some ETFs as well. So, all right, next question. 40-year derivatives trader again. I am so happy you're teaching biblical principles. I hope more people understand and follow God's word. I think there's a lot of stuff in the Bible that is useful, even if even if you're not religious or you don't believe or whatever. There's a reason why why it's stuck around for so long, and I think there's a lot of stuff that's just useful for life and improving your life and the lives of those around you, even if you're not spiritual or religious about it. So any old pics with hair, yeah. I wonder if I can pull them up. I may not be able to show you. I did used to have hair. Let's see. Okay, I think I can show you this one. It's my wedding picture. So you can see I was already thinning out right there, but I did have some hair. Also, I was a bit chubbier back then. Okay. Let's see what's next. The market is so disconnected, it keeps me out of it. I mean, I understand the sentiment and the feeling. Really, though, you have to peel back the layers. So your top layer in your mind right now is, I see these things happening in the economy, but the market is doing really well. So that feels disconnected to me. So I don't want to invest in it. When you peel back that layer, you realize, okay, well, why does that disconnection make you feel like you don't want to invest? And it's because you feel like you're right about the economy and everybody who's investing in the market is wrong. And so you think what's going to happen is the market will correct for the truth and come down to economic reality. And the reality is, in order to make this is Ray Dalio, not me. In order to make money investing, you have to bet against the consensus and be right. So if you are right about this, then the market will come down, and then because at the end of the day, you have a position no matter what. Even if you're not invested, you've got your money in cash. If you don't have it in cash, you got it in Bitcoin, or you got it in gold, you got it in real estate, you got it in something, you got it in consumer goods. You have a position, whether your position is just, in cash or stocks or whatever, it's still a position. Um, and so you are there. There's no way to not play the game. You are actively choosing one thing always, and so in order to make money doing that, you have to be right. So then the way you have to play this game over the long term is you make a choice, which you are doing by default. You always have a choice, a position. Um, you have to analyze that and say, okay, well, did I end up making money from that or not? And if I didn't, then I did something wrong, because at the end of the day, investing is the only measure of it is how much money you made, how much wealth you created. Um, and if you are wrong about it, then you have to figure out why. Like, what did I not see? What did I miss? So then the next time, instead of just making a choice because of what you think, you have to approach it like a scientist. In other words, you try and prove yourself wrong. So, okay, if I was wrong about this, what would the reality be and how would I be able to find that out? So if I think the market's going to go down because the economy is bad, well, then what if the people who are buying and the market is going up as a result, because everybody is paying more and higher and higher prices for these things? What if they're seeing something that I'm not? So what is it that I'm missing? Maybe there's different job data. Maybe there's different debt data. Maybe there's different monetary policy coming down the pipeline. Maybe there's an expansion of the money supply. Maybe corporate profits have been increasing. Maybe whatever it is. So you have to think, okay, well, what would I need to see if I was wrong, and then go look for that to see if that's truth, and then weigh it against the things that you already saw, because maybe the economy is bad for 40% of people who are in, food soup lines and, the food pantries, and are struggling. But maybe none of those people were spending a lot of money in the economy before and not contributing to economic growth based on their spending. Maybe they're low income, so they're not producing a lot on the working and job side either. And maybe everybody else at the top end who has money to spend, maybe their incomes are increasing and they're spending more, and profits are increasing as well. So maybe it's like, okay, well, maybe both are true, which means that the asset prices will continue to do this. And so I'm not stating that that is certainly the case, but I am saying that fear will, over the long term, cause you to lose a lot more than you make, because once the market does start falling, probably not going to have the ability to remove the fear in the face of your worst fears being realized, and decide to jump in. And if, like, one way to check that is, okay, what were you positioned back in April? Were you all the way invested and you sold right before the crash and you bought back in at the bottom? It's like, okay, well, you got some way of being able to, accurately figure out what's going on in the markets. But if you were in cash before April and you never bought in at the bottom of the 20%, that's a bear market. It happened in April already. If you never got in and you've been waiting for it's like, well, what makes you think you'll get in on the next one then? You didn't on the last one. Did you buy during 2022 during the 30% bear market? So you have to analyze your past. You have to try and prove yourself wrong. Otherwise, fear will control you and you won't be able to make money over the long term. Okay. What do you think about emerging markets, South African in general, or in particular? Um, in general, I'm bullish on emerging markets, but not as much as I used to be. And I don't know. I don't have any educated comment at all about South Africa. Um, I'd probably, if you were to force me to choose a region, I'd probably choose um, a few countries in South America. Part of the problem is a lot of the markets around the world are not as sophisticated, so you don't have direct access to some of the things like the best money making opportunities by just finding like an index fund. So usually the best way is to just, get a broad based index fund, or at least a broad instead of just a foreign or a global fund that you can piecemeal it together by saying, okay, well, here's a South America fund, here's a Southeast Asian fund, ex China, or here's a China fund, or here's so you can kind of piecemeal it together like that if you don't like the allocations of the just the broad global funds. Selling many books, just bought another copy as a gift. No, I don't. I really don't sell a lot of those, probably because nobody really knows about it. I have a blank book. It's called Why We Need the Fed. In fact, it's right there. Right. Jeez, why is this so hard? Right there. It's called Why We Need the Fed, and um, there's a funny little intro and chapter titles, but it's a blank book. So it's just a gag gift. Yeah, okay. Looks like I glitched out again when I was doing the screen share, so I won't do that again. Short Carvana. I've got puts on Carvana, so um, I'm not sure. I don't ever just short shares. If I was going to, I would always do it by pairing it with a long call to hedge because um, when you're short shares, you've got unlimited risk on the table because stock can gap up theoretically an unlimited amount. And when you're short shares, you owe shares back regardless of what the price is. So if you buy shares, the worst case scenario is you lose 100% of the money you put into that trade. If you short shares, worst case scenario is you owe an unlimited amount of money to the broker. If it gaps up overnight and you can't close the shares out. So I don't do that. If I am bearish on a stock, then I will use options. Thoughts on Wendy's stock? I don't have any off the top of the head thoughts on Wendy's stocks. Wendy's stock. I don't even know their symbol. Wendy's. WEN. Ooh, that doesn't look good. Not surprising. I don't know the last time that I heard of somebody going to Wendy's. Maybe it's a catching the falling knife situation if you're trying to nail the bottom there. But I mean, it looks like they just recently just sliced through some long-term support. So there's a little bit where we're at right now. I would say the next level where there's some strong support would be like the $5.50 range. Kind of a big kind of a gap before we get down there, honestly. And then below that would be, I don't know, the somewhere in between the $4 to $3 range. I'd be surprised just from a chart perspective if it got lower than that. Um, $1.5 billion market cap, and their PE ratio is 9. I mean, I don't know anything about the company fundamentally. They obviously are going through some problems for it to be falling this much. And so you need to be betting on a pretty big turnaround um, to get that selling to stop. Okay, next question. Isn't unemployment expected to continue to spike, which would lead to people unable to make their new car payments, which would cause a flood of used cars? Um, Part of the problem with the car market is that for the most part, there are not a whole lot of extra cars in the total car fleet in the country. In other words, it's not like the average household is sitting on 3 or 4 cars when in reality they need 1 or 2. Certainly there's some people who are like, but it's not common. Um, and also cars are consumable. So they're constantly getting into car accidents and getting totaled. They are they get used up. They've got, mechanical issues. So for the most part, if somebody loses a car through like a repo or something like that, they generally need to go get another car to replace it. And usually that just is moving down the chain in terms of, cost and price and quality. But overall, what what that means is that hard economic times don't usually produce a massive increase in supply of used cars because every new one that becomes supply gets, there's another supply in general that gets taken off the market. So you might have little spikes that are local or like at different levels of the pricing range. Um, the other thing is a lot of the layoffs that are happening right now are not really at the low end. A lot of the layoffs that are happening are towards the middle upper end of the income range. Um, And right now, most of the delinquencies that are happening across auto loans are at the subprime borrower level, not at the not at the level where the six figure household level. So all that being said, I'm not convinced, especially in the face of the easing that we're entering into for 2026. I'm not convinced that we're about to see a huge, massive blow up with everybody losing their cars and cars super cheap everywhere. And also a lot of the layoffs that are expected, they're just announced right now. And a lot of them have, severance that come with it. A lot of them are planned for later on down the road. So we're at like a spike. We're seeing a spike in layoff announcements, but not necessarily actual layoffs that are happening right now. Let's see here. Do you think you're going to change the exit on the asymmetric trade for IWM? Yeah, within the next couple of probably the next week or so, I'm gonna be sending out a bunch of alerts to close a bunch of trades, some of them that are close to expiring, mildly profitable, some that are close to expiring at a loss, especially some that are in January. We're gonna do some tax loss harvesting, and IWM will probably be one of those that will close out early. Let's see here. I put that Genesis verse in my notebook. Good. I'm glad you liked it. Also, Deuteronomy 8:18. It's remember the Lord your God, for it is God that gives you the ability to produce wealth. I like that one. Okay. Jesus is an example where God's angels supplied. Okay. Well, by that argument, then you should go live out in the desert for 40 days, not eat anything, not and at the end of the 40 days, angels will bring you some bread. And if you think that the things that happened to Jesus happened as a model for us to follow, then you should also go probably try and get crucified. Otherwise, it's not an argument about what God wants you to do in terms of how you live your life. For some, the love of money manifests as a refusal to make long term investments because of short term appetites. Yes, because when you desire something so intensely that you are willing to live in a way that is like worship towards it, like you're treating it functionally as if it's your god, you are unwilling to sacrifice that thing. You might be willing to make sacrifices to get more of that thing. Like, I mean, that's when you think about functionally how people throughout history have treated gods, I make sacrifices for the god. I'm not sacrificing the god. I'm making sacrifices to the god. So the love of money, treating it as a god and worshiping it and being its slave is you are making sacrifices elsewhere in your life for the service of that thing. in order to save and invest for the future and produce more than you consume and invest it wisely, you are sacrificing that thing. In other words, I am sacrificing consuming that money right now for a future good, for a later person who's really kind of your future self is a different person than who you are right now. And so you have to be making a sacrifice of money for someone else, your future self, your future family, in order to do that. And so when you worship money and love money and serve money, everything in your life you're sacrificing for that, which means I'm sacrificing my future for money right now. I'm sacrificing taking care of others for consumption right now. So absolutely. Let's see here. Beautiful couple. So I'm behind on the chat. I'm at the point now in the chat where everybody was commenting when I was showing the picture of my wife and I at our, on our wedding picture. And yeah, it's funny looking back at that. You got the little chubby baby cheeks, but I was still losing hair already at that point. So I'm glad I was able to lock in my wife before I went completely bald, because who knows how difficult it could have gotten after that point. Um, Nice biblical insights to money. Wonder how heresy was used in your channel name. Okay, so that's actually, looking back on it, I like, and I recommend this to everybody. Like, you should use your personal name if you're ever going to create content, ever going to make a podcast, YouTube channel, TikTok, Instagram, whatever. Use your personal name and use your real name. The reason why I didn't was because my name is Joe Brown, and that's actually my name. And there are so many Joe Browns, not included, like not excluding Judge Joe Brown, who's a famous judge, a famous Joe Brown. I felt like it was going to be a lot more difficult to build my brand using my personal name. So I was like, I'm going to come up with, I'll just use my business name, and I want to come up with something. And I looked at, people like George Gammon, who had Rebel Capitalist. And I was like, I really love that idea of being against the grain. And we talk about economics and finance and investing and all that. And all throughout, a lot of people don't know this, but I actually went to school for my degrees in Christian ministries. I went to school to be, I was planning on becoming a pastor. I graduated with a ton of debt. And once I started learning about money, I really fell in love with, like, understanding and executing personal finance and helping those around me in that. And I was like, man, this is actually my skill set. If I really want to help people over the long term, the way that I thought, my life was headed towards, it's like I can do the most good with my skill set and my interest in helping people with investing and personal finance. And so that's when I decided to change careers and become a stockbroker. But in that process, I realized a lot of what I knew to be true about money from my prior, like, my religious background, people looked at me as if I was a heretic. Like, what do you mean? Like, you're investing? Like, you're not just, saying that it's a good thing to try and stay poor? Like, or like, a lot of things that we've talked about already on the stream, which I won't, rehash just for sake of time. I felt like a lot of people looked at me as a heretic. Um, and then later on, I became a stockbroker. I did that for a long time, and it was my one of my biggest personal hobbies was learning about how the economy worked. And for the first couple of years, it was like I was just drinking through a fire hose basically, and I was absorbing everything I could from inside of the belly of the beast, from from inside of the system in the machine, trying to learn how everything worked. But it got to a point where I realized I was like, even the top level people, like, don't really understand a lot about how this stuff actually works. And I kept on hitting roadblocks and walls in trying to learn about all of this. And so I started studying outside and reading books. And that's when I discovered, like, Austrian economics and, listening to podcasts and stuff. And then after a while of that, it got to a point where I was like, the what's it called? The veil had been lifted from my eyes, and I, saw clearly how everything works. And I'm like, I don't have confidence that what I am selling now is good for people, given what I know about the economy and what I think is going to happen in the future. And in 2019 is when I quit and I started Heresy Financial. And I was telling people to do things like, like buy gold because massive inflation is coming. And this was 2019, before the average person at that time did not know have never heard of the Federal Reserve, didn't know who Jerome Powell was. Like it was, it was a different world prior to 2020. And so what at that time, I felt like a heretic to the financial establishment because I'm talking about things. And the classic response was the only thing gold is good for is to throw it through a window in the grocery store after the apocalypse happens. Like that's the only use you'll ever get out of it. There's no, inherent value. And so just the basic things I thought people should be doing, investing for themselves and learning how to do that rather than paying 2% for an advisor to put you in an index fund. I felt like, a heretic to the financial establishment. So for those two reasons, that's why I named my channel Heresy Financial, because I felt like heretic. But the other thing is, historically, most people who are labeled heretics end up being proven right in the future. Like Galileo was called a heretic because he said the earth went around the sun, not the other way around. Turns out, later on, everybody realized, okay, yeah, he's right. And so, that was the third piece to it is like, okay, right now, the people in power, the establishment, they look at, the things that I think are true as heresy. Um, but I think they're truth. And over time that'll be revealed. All right. Next question. One of the most insane 5-year charts is Carvana. I mean, yeah, they crashed from, you know, almost, like a 95% crash from top to bottom after the whole, bubble in 2020 and 2021. During that whole time where they were going up, the insiders and the family they were selling billions and billions and billions and billions of dollars worth of shares, allegedly offloading a lot of the bad loans to a private partner company, um, and it crashed. Started going back up again recently, and insiders have been doing the same thing, just dumping billions and billions and billions of dollars worth of shares. And so, yeah, we'll see. Um, about how long does it take for the Fed's new liquidity to flow through assets? I mean, it depends. So when you look at gold tends to front run monetary policy changes. And so from like 2019 through like August of 2020, gold just flew through the roof. And August of 2020 was like, that's when gold peaked. And that was also like right when a lot of the like, the liquidity stuff, monetary policy had barely started by August of 2020. But gold tends to front run those things. And that was, it had peaked and then it moved sideways for years from there. Stocks and real estate, they kept on moving for a long time after that because they didn't start moving really until March of 2020. So like once March, April 2020, once the printing and the liquidity and all of that, the easing actually started hitting, then those, the more traditional assets, they started to react to that. And they kept on going until the end of 2021. Um, and then the bear market hit in 2022 once the tightening started. Gold had been front running that tightening though for so many years that gold eventually, they broke out because again, gold is just front running future monetary policy, whereas the other assets are just reacting quickly to it very soon. And then things like wages, they get impacted last. So wages take a long time because you got at least a year for prices to move before the cost of living adjustments happen. So wages are the last thing to respond. Um, oh, and in between there, you've got like goods and services. So it's like gold, then other assets, then goods and services, and then wages. That tends to be like the path that monetary policy plays through in an economy in terms of the lag effect of where it hits the economy. So that's true of both easing and tightening. There's not a standard like year and a half or 6 months, because a lot of it has to do with magnitude as well. the easing that we're heading into in 2026 is not going to be anywhere near the magnitude of easing that we saw in 2020. The extent of it will be making sure the government can continue to borrow and spend for cheaper. That's why QT just ended, and they're doing an Operation Twist on their balance sheet to roll off mortgage-backed securities so they can buy more T-bills. That makes government spending easier. That's why they're talking about bank deregulation so banks can do more QE for the Fed. That's why they're lowering short-term interest rates. It helps out T-bills. So it's not going to be something like we saw in 2020, 2021 in terms of asset prices. But it's definitely not like we've just ended a tightening period. So it's not going to be something like 2022 where they're just ratcheting up interest rates and draining the balance sheet and trying to suck money out of out of circulation, and everything goes down as a result. The best play is Berkshire Hathaway because they have the bullets and the big tech. I mean, Berkshire Hathaway, it's like at this point, it's like a Warren Buffett mutual fund. It's very difficult over the long term to go wrong with investing the way Warren Buffett does. You're just gonna feel dumb for a long time, and then you're gonna feel very good. And then, it's because it goes through those swings when the market goes through these phases of like euphoria and fear, and there's times when the overall market just does way better than Buffett, and everybody says, "Oh, old school, like he doesn't know what's going on, like, it's over," and then suddenly, he starts to outperform again for a long time for good. So the big question mark is, are they going to continue to do that now that Buffett's out? I mean, he's retiring this month. He's probably going to pass away soon just because of his age. So big question mark is, will they continue to do so? And I think that the leadership that he's set up there he's done a good enough job where they're going to be able to carry on his legacy and his decision making frameworks, and will be able to continue to perform very well for a very long time. I am long, so, take that opinion for what it's worth. All right, let's see. You said you were bullish on Cummins in a live stream a few weeks ago. Can you share your bullish thesis? Yeah, so Cummins is a diesel engine company. They make the big diesels in the Ram trucks, and they also make, around the world diesels for all sorts of other vehicles. Um, So there's a couple rules of thumb that like any person, any average person can take. And when I say average, I just mean typical. Um, if you don't want to apply a ton of work to choosing companies to investing in, there are a couple like kind of hacks or like rules of thumb that you can use that get you really close to the like picking good companies from, based on like financial metrics that are easy for a typical person to do without a background in finance. And so one of them is, um, does this company have any sort of a cult following? In other words, like, are there people who their entire lives they will only buy that product from that company because they love it so much? Um, it's very difficult as a company to get to that point where you have a group of customers, especially a large group of customers, that treat you as if, like, it's called a cult following for a reason, because it's like, no matter what, the only product that I will buy will be a Cummins diesel. It might be in a Nissan, might be in a Ram, whatever, but it's, that's what I'm going to drive. And that's, not me personally, but that's what a lot of people do. The reason why it's so difficult is because you have to make a really, 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 really good product that lasts for a long time relative to its um, competitors. And if you can nail product, that's about 95% of business. This is not something that I've you know discovered on my own. It's something that a lot of investors and business owners talk about. But like, if you're gonna, like, you want to start a coffee shop because, like, oh, I want to, that's just a dream of mine, I want to run my own little coffee shop. You can do all the marketing in the world. You can spend all the money you want on marketing. You can hire the best people who are the happiest. You can make the coolest, have the best music, have the most comfy chairs, have the quickest service. But if the coffee sucks and people take one drink of it and they're like, eh, really not that great. I don't like the way this tastes. They're never coming back because the product is the coffee. On the other hand, if somebody stops in and they're like, okay, well, it was a long wait because there was a long line. Um, the cashier didn't know what buttons to press. It was hard to find parking, but man, that was the best coffee I've ever had. I don't know how they made it. I I'm going back. Number 1, they're gonna go back, but number 2, they're gonna tell everybody about it. And a lot of you are probably thinking, well, coffee is a terrible example because Starbucks has terrible coffee. In certain situations, the product isn't the product. Maybe it's the environment. Maybe it's the consistency. It's like there's a reason why like McDonald's is popular is not because they're the best burger in the world, but because you know what you're going to get and you're used to that flavor and it's the same exact thing everywhere you go. So sometimes the product is something other than what you think the product is. But it's a lot. Let's say you want to start a cookie store. It's like somebody goes in and buys a cookie and it's not that great, they're never going back. Doesn't matter how much you spend on marketing or anything else. You have the best cookie you've ever eaten in your life. You're going to go back and you're going to bring your friends or family and you're going to tell people about it. And it's like, I don't know how they made that cookie, but it was unbelievable. And I had to wait in a line and it was super expensive, but I've never had a cookie that good. And so the idea is if you can make a product that is so good that you create a cult of lifelong raving fans, you've nailed 95% of the business to be able to have the quality of the delivery and make the product that people will keep on coming back for. The other stuff is just like icing on the cake. And so that's a long-winded way of saying that like that's one thing that Cummins has done well. Um, and that is one really good rule of thumb for being able to find quality businesses. Now, it doesn't necessarily mean that it's going to be a successful investment, but if you can make a list of the companies that you absolutely love spending money at, um, and you love their customer service or you love their management, you love the people you interact with there, you love the product. Um, if you can make a list of those companies, chances are a good percentage of them are going to be pretty high quality companies to, be an investor and an owner of for a long period of time. Okay. Am I worshiping sacrificing by sacrificing so much for my family? I think that might be a joke. I don't really know what you mean. Um, theologically, how do you reconcile free will and predestination? Well, in practice, life feels like we have free will. Whether it's an illusion or not is irrelevant because it doesn't change the choices that we make. Based on the fact that we do, or in practice, feel like we are making choices that result in different results, means that it doesn't really matter if it's a grand cosmic illusion behind the scenes because to us, that's what reality is like. So if it doesn't change anything about how I live and what I do, then it's not really worth, in my opinion, spending a whole lot of time thinking about, oh, in reality, was this all just like created ahead of time? Like I didn't actually have any choice. Well, it's like, but I did choose it. So even if it's an illusion, I'm still participating in that. So either we pretend we have free will and we act that out and exercise our free will in life. And at the end of time, we realize, oh, it was just an illusion. It's like, okay, well, I still live the way that I was choosing to live, or we actually do have free will and it does matter. Either way, it's better to act as if free will exists. So if it's not going to change anything about the way I do and live life, not really worth arguing about or thinking about, I think. All right, let's see. What does your school for trading offer that makes it worth it versus other institutions? Okay. I don't talk a lot about my product offering, but based on that question, I can see that maybe I need to a little bit more because maybe it's not really clear exactly what I do, how I make money. I make my money for the most part through my trading and my investing. And a couple of years ago, I did a little trial offer where I started sharing my investment research and my trades with members of my courses. So I don't anymore. I used to primarily just sell my courses. So I'd have like education on teaching you investment allocation and get out of debt course and technical analysis course and all my different courses. And that was the main way I used to make money. And so I started sharing my investment research and my trades with those people who were enrolled in my university, and it was just like that became extremely popular. Um, and the reason why I started sharing that is because I personally have good performance investing and trading. So I was like, all right, I'm going to start sharing that as much as possible. Um, and that has far and away become the most popular thing that I sell is just access to my trades. And so it's a trade alert service, investment research service where I say, hey, this is something that I'm, buying calls on, buying puts on, whatever, and here's why. And you can follow along with me if you like, or if not, if you don't want to. And I share with you my opinions, my research, and why I think that, and the trade that I'm doing. So I'll share with you, okay, like here's a strike price that I'm buying, here's the expiration date, and all that. Um, Packaged with that, I also give people because that's the main thing I sell now is like different strategies from my portfolio, my investment research, my trades. Paired with that, I always throw in my courses and my education. So technically, I don't sell my courses anymore. So people always call me a course seller, and it's like I mean, I get it. You could go and find my courses, and technically, I think you can still buy them. But like I'm not actively selling them anymore. I throw those in as like bundles so that if you don't know how to do something with your overall portfolio, that I'm talking about in any of my investment research or my trade alerts, then you have the ability to go and do that. So there, in terms of like education, that one of the reasons why I pivoted away from selling education is because it's like you can learn anything for free, like anything. Um, And usually you learn faster if you pay for it because it's curated and directed in a way that you need it that applies to your situation, but you can learn anything for free. So I found it very difficult to continue to uh, get customers to continue buying stuff from me because it's like, well, I already learned everything from you. So why would I, buy the same thing again type of thing. Um, and that's why the new thing, selling it's not new. I've been doing it for a couple of years now. So selling access to my trades has been so much more popular, and that's the main thing that I sell now. So, and the reality is that is, I guess you could say, proprietary. Like that's the edge. That's the thing that separates or differentiates me. It's like this is how I'm investing. I'm gonna share with you the trades that I'm making, and nobody else is trading my exact portfolio. So you literally can't get that anywhere. The education you could, but again, I don't sell that. I just throw that in for free. Let's see. After 6 plus years of watching you, I get the story of the heretic. That's so funny, man. Yeah, sometimes I should probably share my story a little bit more than I normally do. It's just it feels hard to fit it in. There's always something going on in the news and whatever. So, but I'm glad that you finally understand why I named the channel the way the way I did, and in the background there. Um, The reference of throwing it through the grocery store windows reminds me of the book Psychology of Money. Yes. And that shocks me because I'm pretty sure the Psychology of Money is a newer book. I'm pretty sure Morgan Housel wrote that in 2021, maybe 2022. I could be wrong about that, but I just recently read another one of his books. It's his newest one. What's his newest one called? It's the Art of Spending Money, and I'm pretty sure he repeated that exact same line in that book too. It's like, Man, at this point, you'd think that most people would realize the monetary usefulness of of gold. And I guess that's a good sign, if you're bullish on gold that, most people, especially Americans, aren't there yet. So, all right. Can you suggest a better short-term place for cash to get gains like the BIL stock? So BIL, for those of you who aren't aware, BIL is an ETF. It's a symbol. It's a T-bill ETF. And so you put your money in this ETF, and the ETF, instead of purchasing stocks with your money, they purchase T-bills. Nothing wrong with it. Fantastic, easy way to get access to T-bills. If you want to eliminate the intermediary, you can buy T-bills direct on the Treasury's website. That is really only worth it if you have a large amount of cash that you need to deploy. For instance, I tend to stick to and recommend about a 5% allocation of your portfolio in cash and cash equivalents. For a lot of people, that 5% is well over 250 grand. So if you have it in a bank, you're over the FDIC limit. The bank goes under, you lose everything above 250. So some people, they'll open up multiple bank accounts at different banks to spread out that FDIC coverage. But then if you get like, 4 banks, 5, it just starts getting to be a hassle. And so what banks do with your money is they're buying T-bills anyway. And so you're going to avoid, getting gypped a little bit on the interest rate by just going to T-bills direct. And it's like, unless you think the government will default, which I don't think they will, then I think you have a greater likelihood of like a bank failing and then FDIC failing and then the Fed having to do a money printing bailout to fund the FDIC. I think that's more likely than the government itself defaulting on paying back T-bills because there's no such thing as risk-free in life. Everything carries some degree of risk, but T-bills are about as close as you can get. And so a money market fund that goes into T-bills, great. An ETF that goes into T-bills, great. Or getting T-bills themselves. So, but if you have less than 250 grand, I mean, put it in a high yield savings account, put it in a money market fund. You don't need to do anything fancy. All right. What to do when the market is not moving? How to get our dopamine hit? uh, One thing is Bitcoin, because that trades 24/7. And the other recent thing that you can do is you don't have to open up well, maybe you have to open up an account. I don't know, but you don't have to put money in the account. But Robinhood has 24/7 trading on not all stocks, but I think most stocks. And so, in the middle of the night, actually, I don't know if it's on the weekend. So don't, it might not be 24/7. It might be 24/5. You guys can correct me in the chat if I'm wrong about that. But that's one way to get your dopamine fix. Um, Another way is to have a family. If you've got a wife and kids, you don't really have time to worry about dopamine hits. You're you're doing stuff. Family keeps you kind of busy. So there's that as well. Um, Robert Schmidt, I want to start a YouTube channel telling people to use Linux, but I don't want to actually talk on video. Well, the thing you most want to find will be found in the place you least want to look. Sometimes you have to sacrifice something you want right now in order to get the thing that you want most. I don't know if that applies to your situation, Robert, but trying to circumvent being yourself and having that vulnerability of showing who you are, even through just voice and just talking, means that you are going to have a much more difficult time actually achieving the goals that you want to achieve. Is it possible to start a YouTube channel without using your voice? Yeah, absolutely. Pay somebody to speak the video for you. You literally hire somebody off of Fiverr and you give them the script and they'll read it for you. Or there's AI tools out there that'll do that. But in the world of of cheap labor like that and like AI content becoming so abundant, real personalities and real opinions, and when people can tell there's a real person on the other side of the camera, it becomes very valuable. Why do you think I'm spending over an hour multiple times a week sitting here on live stream on my webcam answering any question you guys throw in the chat? It's not because it's like from a financial perspective, at least the exact stream, a good use of my time for like the return. It's because the brand that it builds in terms of allowing people to get to know me, to see that I'm a real person, to realize, hey, that's not an AI, bald man with a beard uh making YouTube videos. Like this is a real person with a real story and real mess ups when they're talking and opinions about things that, run contrary to other sources that I've listened to before. So there's something interesting to chew on and think about here. That kind of stuff is what builds a brand. And if you want to make money, I think in the next 10 to 20 years, most of it's going to be from people believing that you are a real person, which will require you to be showing people you're a real person, which might require voice. So, not telling you to do that, but um, it might be a sacrifice worth considering. Okay, next question. Is physical gold and silver still a good investment? I am bullish on silver over the long term. Short term, choppy. Gold, I don't really consider an investment. Gold is a monetary asset, so it operates more like a savings account. And that means it maintains its purchasing power over the long term. And so I am always looking at gold as, hey, it's just my reserves. There will be short-term periods of time where you are, you have relative gains or losses compared to the rest of your portfolio. But over the long term, whether you measure it in, periods of time more than like 3 to 4 years, it's going to maintain a relatively stable purchasing power. In marketing, we were taught that people tell 9 to 16 people about a negative event versus 2 to 9 people about a positive one. I mean, that's absolutely true. I mean, I don't know about the exact numbers, how that works out in reality, because there's some people who are super spreaders. So I can like I am a super spreader of reviews about like products and companies. We found a burger truck that is just absolutely amazing. Just so like this is like the product thing you're talking about, like or that I was talking about. This this burger tastes unbelievable. The fries are unbelievable, and it's made they make it healthy. They make their own buns. The fries are fried in beef tallow. Like it's all they get their beef from local like what's it called? Regenerative farming, and the food tastes amazing. It is so hard to actually like number one, find where this food truck is going to be. Look up the days where they're somewhere, and some days they're nowhere. Um, and it's expensive, and there's a long wait for your food. There's a long line to pay, long wait for your food. And we have brought, we have gone back multiple times, told every time burgers come up in a conversation, we tell them about this place, and we've brought people there back with us. Um, and on the flip side, there's plenty of places plenty of burger places that we've tried in the past where it's like, it gets brought up. Oh, don't go back there. Nope, nothing special. So, and then if it's a bad experience, then yeah, it's like super spreaders will spread that, just like just like they will the good stuff. All right, let's see. All right, Tim, the trade suggestions are worth it. Well, thank you for the public feedback there. Appreciate it. On the trade alert service that I have. I talked my dad into buying a 2010 Ram Cummins to tow my race car. It was like 4 years old with 100,000 miles, and he sold it in 2016 because the Cummins shop had terrible service and couldn't figure it out. A valve cover leak. Um, yeah, I mean, obviously, every product is going to have failures and have stories like that. I think the broader consensus is that by people who own Cummins is not like that. But but part I would have to I mean, I don't know the details there. Part of me thinks that that was a Ram thing and not because you said the Cummins shop. Was it a Ram dealership? Because I've known people with, with Ram, something goes wrong with the truck and they'll have to go to like 8 different like Ram dealerships and it's like there's, something wrong with the AC and it's like nobody can figure it out. It's like, the bottom line is that for the engine, that's not the general reputation. Um, Whereas there are other engines where that's like definitely the reputation, like Land Rover overall is like a car company has that general reputation. It's like the most expensive, unreliable thing you could ever buy. And again, some people still really like them, but I'm talking about the general reputation by the core audience. What do you think about the buy, borrow, and die strategy for a 63-year-old? Well, it depends. Number one, debt always introduces risk. So I am not a Dave Ramsey like, type of person who says, debt is always bad, always stay away. I think there are times where debt is very, very useful as a tool. But it is true that debt always does introduce risk. Even if you're using debt appropriately in order to purchase assets that pay for the debt plus some, there's still an element of risk because the debt needs to get paid back in dollars. And there's always the chance something could happen where the asset is not worth what you thought it should be worth or what you thought it was going to be worth. And then you're on the hook. And so if you have no dependents, I'm sorry, not dependents. If you have no kids, nobody you're planning on passing anything off to, um, and you're willing to take that risk of, hey, in my death, maybe the debt is worth, equal to or more than the assets and I don't care, then, for you personally, there might not be that much risk. But you're only 63, so you're probably as long as you're in decent health, especially with everything, all the advancements in health and technology and information that we have these days, there's a good chance you're still looking at a 30-year time horizon from here. So I tend to, especially, towards the end, you're not looking at a 60-year time horizon from here. So this is a time where you're probably looking at de-risking, not adding risk. Um, because if the whole goal is to just avoid the taxes, then you're removing the definite risk of the loss that you have from taxes by adding in an indefinite risk of the repayment of that debt later. As long as I would say, as long as you stay conservative, judicious with it, very, very, comfortable in terms of the debt service cost versus the cash flow the assets spit off, then you're probably not going to wind up in a world of trouble. Um, but It's definitely just not as, like, straightforward and risk-free as most people tend to promote it as. Alright, what do you think about Jack's company XXI now that they got the ticker? What company is XXI? That Cantor Equity Partners? 21 Capital? Um, I'm assuming this is Jack Dorsey. Um, what is their Cantor Equity? Let's see. Tether backed 21 Capital slides in trading debut. It's Bitcoin focused company. Recently completed a SPAC merger with Cantor. Okay, so Cantor Equity Partners was the SPAC, and so the new company is 21 Capital. It is a major Bitcoin holder with over 43,000 Bitcoin. Oh, Jack Mahler's. Okay, I was gonna say I didn't think I would have known if Jack Dorsey was doing something like this. Jack Mahler's. Okay, I don't know. I don't like it actually. I don't know much about it, so this is an uneducated opinion. A couple of things. Number one, I almost never, ever, 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 ever buy IPOs. Um, Generally, what happens with IPOs is there's a ton of hype and then a bunch of insider selling for like the first year. And so most of the time, what you see is after an IPO, stock pops and then spends a year just sliding and getting destroyed. Now this might be different because of what they're doing with the money. You know, they're it looks like they're a Bitcoin holding company. I think they're using a bunch of debt as well. So it could be different. But yeah, I don't have an educated opinion about it. I'll leave it there. My gut reaction to what I've seen about what they're trying to do, and I just I'd rather just own Bitcoin. I am not familiar with butterfly networks. Sorry. Cartwheel right now or your AI. I don't know. I might just let you believe I'm AI. Don't really want to do a cartwheel. I know that it might look like a big space, but I probably hit my foot over there. By the way, guys, this is where I film my YouTube videos. So like that's the background over there in my YouTube videos, and then that is like that's my cameras and lights and microphones and all that. And all those boxes underneath my desk are my Christmas gifts for my wife that I'm trying to hide from her until I wrap them. Scrooge McDuck wall art is legit. How much? It was like 12 grand. I commissioned it. It was a unique piece from this girl in Russia. Her name is Daria Kosalova. Fantastic. It's like on copper. It's just in person. It looks brilliant. So I call it capitalism. I've seen her work for years, and I was like, someday I'm going to get something from her because she's just beautiful art. And so it's Scrooge McDuck and Monopoly Man playing poker together. They've got gold and cash and Bitcoin, and it's about risk and everything that those guys represent. So I like it. All right, let's see. Thoughts on private credit loans blowing up the corporate space right now across the country. In the words of Ben Bernanke, I think the crisis is contained. But in reality, I don't think this has the teeth on it to bleed over into the broader economy. Um, it's there's not a lot of systemically important players facing large enough losses to significantly impact viability. I don't have a wife, but I do day trade indices. You lose money in both cases. In my case, you lose less money from being married. Marry the right person, and they help you save money. Yeah, unless you get a wife that's a better trader than you. Yeah. What are your thoughts on day trading futures versus swing trading stocks for active income? I mean, I would say either, you know, that's comparing apple pie to orange juice. It's like, why not compare day trading futures to day trading stocks? Um, so actively trading anything, the more active you are in trading, the more robotic you have to be. So if you're day trading something, you have to be basically a computer. And that's why there are no individuals really at the institutional level who are making the active trading decisions. The active trading decisions are programs that are created by humans, but it is just too difficult to not use emotion and therefore fear and greed in the trading decision once money is on the line. And so you program the strategy and then execute it programmatically so that you're not making dumb emotional decisions. And then you tweak it to help it work. And so that's personally why I don't day trade. And just for clarification, day trading means you're opening and closing the same position in the same day. Um, and I don't do that because I'm not good enough at removing my emotion from the trade. I'm very volatile and neurotic. Um, and so I have, and so in order to make money investing, I have to be able to remove that as much as possible, which means A, I'm extending my time frame, and B, I'm setting my exits before I enter, and tweaking the strategy in a way where I can emotionally disconnect from it. All right, let's see. Um, it was not a Ram dealer. It was a Cummins branded shop. The only side out front said Cummins. All right, yeah, interesting. Um, I am fairly certain that that experience is not very common. Otherwise, it wouldn't have the reputation that it does. But obviously, it happens. All right, let's see. Butterfly Networks. All right. Um, Butterfly Networks. You want me to look at the chart? So I don't know anything about the stock. Butterfly Network says health technology. Okay, so one thing like you always want to do when you're like looking at an opportunity for the first time, I just want to see what the long-term uh, uh, trajectory of the company looks like. In general, is it fairly flat or up and to the right at least a little bit, or is it down and to the right? Butterfly Networks is a very ugly chart. So, but this is typical of IPOs. So they IPO'd in 2020, had a huge bubble pop, and then when that market popped, it started to have a big crash, and that's typically what you see from IPOs. So that by itself is not something that would make me discount this. I would have to say, okay, well, that fits with what happens typically during IPOs. What is this company? What was the hype that people were investing in it originally? Why did it have such a big sell off? Probably a bunch of insider selling, and then all the initial people who got in, all the retail, they ended up selling at a loss. And it looks like they put in a good base and have started coming back from it. We've got like a rounded bottom. The problem is the price is very, very low. So that's kind of an issue. I would not be surprised if they do some sort of a reverse split at some point, but they're only like $3 a share, and they bottomed out below a dollar. So that's kind of an issue. And if it gets below, like if that stays bad too long, they could be delisted. They're a health technology company. Medical imaging device, whole body portable ultrasound scanner called the IQ device. Are they profitable? They're only $780 million market cap. Let's see. Nope, they're not profitable, negative earnings. What are they trading at? Their price to sales ratio. What's their revenue? So they're trading at a 9 price to sales ratio. I don't know. So the strategy that you talked about there is selling puts in order to bring in income, and then when you get assigned, when they drop and you get and your puts get exercised, now you have the shares and you start selling calls until you get called away. That's fine until you get the shares because the stock plummeted 70% overnight. So I don't know anything about the company. Maybe it's growing fantastically and it's turning around and it's going to be, it looks like a very, very well run company that has healthy financials. Um, but I would be very hesitant to use that strategy on a company that I thought had any decent chance of dropping 50 to 60% overnight, which on those small companies with negative earnings that are volatile, maybe lower volume, seems possible. I don't know if that's possible on this stock, but it's one thing I'd be scared of. All right. What's your freedom number? Well, it depends on what you mean by freedom number. So I could stop working today. I could live off of the income from my investments today. Um, then the question is, what would I be doing? And the reality is I've built the way I run my business in a way where like this is what I would be doing anyway. The work part of it is being able to share it with other people. Um, and the reason I've built my business this way is because I believe that's how I can help the most people do do the most good. And I don't believe in retirement in the form of like sitting on a beach and relaxing and not doing anything, especially, I mean, I've got kids. It's like what kind of example would I be setting for my kids who are working at, doing their schoolwork all day and working hard and doing stuff, and I just be sitting on the couch doing nothing just because my portfolio is big enough. It's like I think there's value in work. I just think that retirement for a lot of people is an escape from a life that they hate, and because most people are doing jobs because they have to pay the bills, and there's honor in that for sure. There's nobility in doing something you don't want to do in order to accomplish what you know you should accomplish. Um, but I think there's a chance most people let fear stop them from doing something that they really would rather do instead, even if it's still work and maybe it's less money, or maybe they want to start that business, or maybe they want to, um, maybe they want, and they never take that leap, and so then they end up being resentful at themselves secretly, maybe, and end up disliking their lives, and so then they finally get that to that point where they retire and they just become a different person, and they just can't. They've given up so much of who they are that when they retire, they just sit around and do nothing and kind of slowly shrivel away in terms of their humanity. Just kind of just shrivel into a lesser version of themselves. I have two. So this is kind of getting past the question, but I have my two grandfathers have very different perspectives growing up and seeing what they did. My one grandfather, he retired very early at like 50 something, got his pension, later on started collecting social security, whatever. And he just retired and straight up like no work, nothing. And I saw over the next, 20 years or so, he just like what I'm describing there, kind of shriveled, took no responsibility on his shoulders, didn't work for anything larger than himself for serving or helping other people. Um, just lived a life of really miserly selfishness, and ended up slowly becoming a lesser and lesser version of himself to the point where he's still alive, but barely the person that I, remember when I was young. Um, and I just don't think that giving up all responsibility is good for people. I think we need to I think we need to have purpose and we need to have meaning and we need to have goals that are difficult to achieve that are good for ourselves and for the world. Um, and the more free you are financially, the more you have the ability to pick that up voluntarily and choose the burdens that you want to bear more. And he chose instead to bear no burdens, and it really has not been didn't end up well good for him. On the other hand, my other grandfather, um, he worked his 9 to 5 sales job his entire life until the day that he couldn't figure out how to get home from work. It was the dementia. He got lost on the way home, called my grandma and said, I can't find my way home. So he retired. Um, he could have retired much earlier than he actually did. Um, and as a result of continuing to work that long, basically never got to experience and I don't know how much he enjoyed or disliked his job. I actually have no idea. Maybe he really liked it. And maybe that was like the thing is like, this is who I am. This is what I do. And like, I'm not making a statement on that front because I don't actually know. But he only lived a couple more years past that because it just kind of took over pretty quick. And so he never got to have the time to like spend some more time with family, do any traveling, anything like that. Um, and, and so I don't think there's a right answer on like timing, but in terms of like what that did to me for my financial goals, it's like, well, I definitely don't want to make either one of those mistakes. I want to make sure that no matter what, I have enough freedom to spend the time that I want to spend with my family. Whether that's right now, my young kids, in the future, grandkids. Um, but I could see very easily accidentally slipping into the opposite side of the spectrum where it's like I give up all responsibility and then I end up um decreasing into a worse version of myself uh, continuously until the day I die. Um, and so I think having voluntary responsibility that we choose to bear in order to make the world around us better is something that we should do. Regardless of the fact that I could stop working today if I wanted to. And then on the fun side, I also really I do like spending money. I've got a really nice truck. I just put a performance package on it. I do like spending money, and so the more I make, the more fun I can have on that front too. So that I mean that's definitely, I'm not gonna lie, that's definitely a part of it. All right. Let's see. Bitcoin Broccoli, thank you for the super chat. I appreciate it. Seen almost every video since 2022. Love the stuff, man. Learned a lot. Thank you so much. 2022, that's been it's been like 3 years now. So thanks for hanging on this whole time. I appreciate it. Oh, JSM, thank you for the super chat. What are your thoughts on BBAI? BBAI. Big Bear AI. Okay. Well, I can't pull up the chart because it makes it glitch out, but we've got a bit of a wedge forming. So wedges are not directional in terms of like they're not directionally biased. They're like breakout patterns. So if we get a breakout to the upside, then that would be bullish. If we get a breakout to the downside, that would be bearish. Um, I right now kind of am not skeptical, just hesitant to invest in any AI companies other than like large, established, very profitable tech companies that are heavily into like AI development. And it's clear to see how they're going to be profitable with that. So, like, for instance, Amazon is going to be a very, very big beneficiary of this because at some point they'll be able to replace basically 90% of their workforce with robots. And so they're going to, because they already have the infrastructure, the logistics, all of that, and the human labor there is a temporary holdover for the cheaper robotic labor. Um, versus companies that are like AI companies seem like maybe a little bit more of a commodity that might be more easily replaced and difficult to establish a moat. It's like it's hard it's going to be hard to compete with Amazon's moat. Like that the logistics and the infrastructure that they have in place is like it's going to be very very expensive and difficult to compete with that. But just straight up AI companies, it's like more of commodities. So I don't know much about Big Bear and exactly what they do. Um, from a chart perspective, if they get a breakout, then that would be a good trade. But from a company like long-term investing, I would have to do a deeper dive. I don't know much about what they do. All right, let's see. Um, where to hide when the US dollar devalues 25% by March 2026 because of printing? I'm not convinced that there's going to be any sort of big quick devaluation like that. The easing period that we're entering into is not something like we saw in 2020 or 2021. There's not $3 trillion that's, about to hit the printers. In fact, even if some sort of a large crisis happens where that would have been the traditional response, this 2020 and 2021 and 22 and 23, like it's in such recent memory, even with policymakers, that it's like they'll be much more controlled with how they do the the bailout, if you will. And the brief glimpse we saw of that already happened when Silicon Valley Bank failed. It was like, okay, we will print enough money to replace the money that disappeared from existence when that bank ceased to exist. So the net number of dollars in the broad money supply did not change from that. It was like the dollars in the bank accounts disappeared and then they were replaced. So it's a higher money supply than there would have been otherwise if they would have let it disappear. But the net change from before to after was zero. And even after that, they said, we will take this on a case by case basis. If there's another bank failure, we're not necessarily guaranteeing a complete bailout. Um, Maybe if it's systemically important. And I think that's the mode of operation moving forward, is looking at things from a case by case basis and being surgical rather than just blunt force easing and stimulus and printing, because they saw what that did when they did increase the money supply by 25% in 1 year. They saw the results of that and they are still dealing with the consequences that unleashed. So they will be very hesitant to do something like that again, which is why I think we're entering into a period more where actually long-term interest rates will be headed higher, because they're going to be financing the government spending, and the inflation expectations that's going to increase across the economy will mean that long-term debt is going to get more expensive, for private market actors. So because again, they're not doing broad easing. It's like, hey, we're doing this for the government specifically. So, but the short answer is, if you want to protect against devaluation of any kind, you buy assets. So monetary assets like gold and Bitcoin, um, companies that produce real goods and services and products like stocks, um, assets that produce cash flow like single family real estate with a 30-year fixed rate mortgage. Um, that's 2,000-year-old advice. Okay. I'm going to do one more question here, guys. We've been going for almost 2 hours now. Lots of good questions today. So thank you. I'm going to get one more here. Um, what are AI's picks and shovels? So for anybody, I'm sure this is one of the most like, when I learned about this in elementary school, I thought like, I filed it away and I was like, oh, that's good to remember for the future. And I think every single it's like there's it's one of the least unique experiences that I've ever had. It's like I think everybody learned this and filed this away, but in the gold rush, the most of the people who got most wealthy were the ones who sold the picks and shovels to the gold miners, not the people who are actually mining for gold. So the idea is, that, people are always looking for what are the picks and shovels. So like with AI is like, okay, if it's going to be difficult to pick, a winner because AI is difficult for the company to have a moat. Um, what are the picks and shovels where it's like in order to service that, that's where the money is going to be made. And the reality is like you just have to take one step back. So it's really mostly energy, um, but it's also chips. It's also grid infrastructure. It's I would say probably those three. And it's a lot of like on-site local, like when you talk about the next 5 to 10 years, it's going to be like producing your own energy. So it's the energy needs are such that they won't be able to get it from the grid. And so that's why a lot of the big companies they're purchasing, like Microsoft got the deal with the 3 Mile Island. Amazon just purchased a nuclear facility. We've got Sam Altman who runs OpenAI. He's also on the board or running Oklo, the small modular reactor nuclear reactor company. And there's plenty of examples like this. It's like we can tell the future of energy is more decentralized in terms of its production and more on site because I mean the grid was built for 20th century America and it's overdue for replacement by like 5 decades and it's breaking and the government cannot produce the energy that we need for the future. So I think energy production across the board, whether that's new innovative solutions that are not nuclear, but they're on site like Bloom Energy, I'm long. Um, whether that's, standard traditional nuclear, whether that's new small modular reactors, um, whether that's just you take it even one step further back and you just go for, uranium. Um, I think those all stand to benefit enormously. Even the companies that work on the grid and do the replacement and the fixing of, delivering that infrastructure, I think all those are very well positioned for the future. Um, and then chips, and I would probably I take it, a little bit further back than just like the actual, the what you think of as the typical semiconductor companies. So instead of looking at companies like Intel or Nvidia or AMD, some of my positions are like ASML. Like that's a pretty big bottleneck when you're the lithography company and everything that comes out of Taiwan Semiconductor is because of your machines. Um, that's a pretty big moat when nobody in the world can figure out how to do what you do. And there's every economic incentive in the entire economy to try and replicate it, and nobody can do it. And it's not because of patents, it's just because it's so dang hard. um, so yeah, I would say those are the big ones in terms if you're looking for like not pickles, picks and shovels. All right, that's it. Been going for 2 hours here. Um, Appreciate it. Lots of great questions today. And I'm trying to do these a couple times a week at least. So, and they'll always be around market close time. I try and start them before the market closes. And so, if you're looking out for it, I think you can hit the little notification bell. It'll send you a notification when I go live. If you're looking for that. Thanks, guys. We'll see you on the next one.